Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So listen, we're nearing a holiday, right? We have July 4th, Independence Day here in the U.S. Markets are closed on Friday, but we did get the ADP private sector data out this morning, and it was not good, folks. All right, so let's take a look at those numbers. We have ADP private sector employment coming in at negative 33,000 jobs. So again, we saw for the first time in a long time a negative jobs report. Now, listen, this isn't the non-farm payrolls report that's going to be due out tomorrow morning. Normally, it's the first Friday because of the holiday. We're going to see it out tomorrow morning. But a negative number versus a plus 99,000 expectation is a massive miss, and we are seeing the stock market react. Now, listen, last month, we saw a weak ADP number. It wasn't negative, but it was very, very weak. I think 37,000. Yet the non-farm payrolls that came out a few days later were still very solid. So again, I think that the market overall is going to most likely not react too negatively to this number. And especially with the holiday coming up, the volume will be light. So again, maybe a small negative day, but overall, I would be somewhat surprised if we see a major negative day on the markets. Just a reminder, guys, we have the institutional level trading, technical trading courses still on sale through July 4th for over 50% off. You can find them on Verified Investing under the courses drop-down tab, all right? So again, just want you guys to make sure to keep an eye out on that. Let's get into the charts now and take a look. This is what we saw this morning when that ADP jobs data came out. We saw a continuation of a sell-off in the S&P futures. Keep in mind, this isn't a major drop. Like, this was yesterday's low down here, and we weren't even down that much on the trading day, and we're not even there now. So yes, the S&P is slated to open down about 10 points or so, but 10 points is not a lot. It's a buck on the SPY. The question is, do we see more of that, or do the markets rebound and float back up? Now, the biggest intrigue of yesterday to me was the first day of the quarter and what happened. All right, so into the end of the second quarter, which was the previous few days, the mega caps kept going up and up and up. We saw Meta hitting a new all-time high, Microsoft, NVIDIA. All of these players were up because institutions were window dressing. They were buying all of these names into the end of quarter. And even if an institutional hedge fund was like, man, NVIDIA's really overbought here, or Microsoft's really overbought, they're not going to sell those positions into quarter end because they want them to show up to the quarterly statements, on the quarterly statements to the investing public, right? To the investors in that fund. And so you had a lack of selling in those names and you had added buying. Well, guess what happened yesterday? What occurred? We saw basically a rotation of capital selling those mega names and rotating into these other ones. Let's take a look. I want to show you this. We'll get back to the S&P in just a second. But look, NVIDIA down yesterday, Microsoft down yesterday, Meta down yesterday. And look at Meta. It had just gapped up the previous day, flushing out the stops or the weak hands on the short right there. Opens above, flushes back below, sells off, and is slated to be selling again today. So the question is, how long does this rotation of capital occur? And again, folks, please understand, this is really important information for future quarters. If you have a big run up, whatever's led the market is unlikely to sell into the end of the quarter. But once the new quarter starts, then these hedge funds say, okay, well, we wanted to sell before quarter end, but we didn't want to have it not on our statements. So now we're going to all sell at the beginning of the new quarter. And that's why you get this drop down. It's also why the Russell was up yesterday. So the NASDAQ was down about 2/3%, but the Russell was up on the day over 1%. And look at the Russell today. It is still slated to open flat to positive, even with the S&P looking to open lower. Why? Because money is looking to rotate. And if you think about it, the Russell underperformed in the second quarter. Basically, this was your April low, which was really the start of the quarter, and the Russell did bounce back. But look, the Russell had a bounce back here, and it is still within, basically, if you look at this, how far away are we from the all-time highs? Still 12.5%. But if you go to the NASDAQ 100, we're at all-time highs, right? So again, the NASDAQ was the leader, and so into quarter end, right here, this is window dressing right here. And now that window dressing is over, you have profit taking by the institutional money. And therefore, my thesis is that as long as the jobs report on tomorrow morning doesn't come out horrendously horrible, then you likely see a catch-up trade in the Russell 2000, meaning that the Russell 2000 now is going to see money rotating from NVIDIA, Meta, Microsoft, JP, like all of these names. It'll rotate and go into this, pushing it up. Now, listen, I don't know if it's going to get to the all-time high or not, but in the very least, it should at least split the difference. So a good upside trade here versus looking for pullbacks in the mega caps. All right, let's go back to the S&P 500 here and just take a look at that. We can see here's our underbelly trend line. Remember, this was the wedge pattern that we had been following. The wedge pattern finally broke, consolidated, went up, retraced to the scene of the crime, and again, was slightly down yesterday, and then today we're looking at a lower open. Now, as you start to pull back, what's your first key level to watch? On the S&P, you're going to watch your previous all-time high at 61.45. 61.45 right here. So this will be a first level to watch, right? 61.45. If we hold it, the market could still float higher, right? So again, if you hold 61.45, you're holding your previous major pivot high. It's basically becoming support. The markets would maintain a short-term neutral to upside bias. If this breaks and we have a daily close with confirmation back below, what does it become? In the technical analysis that I teach in the Winning Trader series, this would be called a failed breakout. And one of the things I stress to people that take the course is that the biggest moves come from failed moves, meaning that when you get a breakout and you fail, you don't just fail and kind of chop around. Failure usually results in a major move down. It's basically a loss of confidence. You got a bunch of bulls to jump on board on the breakout, and now you flush them all out, and panic ensues. Vice versa, if you have a breakdown that then fails and you get back above the key support, now you have a big move to the upside. So you look at that and say, okay, once you confirm one way, if it fails, that's usually a big move in the opposite way. And again, the biggest moves come from failed moves. Always remember that, guys. Okay, so again, we'll watch this 61.45. I don't know if we'll test it today. We'd have to be down about 50 points on the S&P to test it, but that'll be my first level to watch on the downside. All right, flipping over to the U.S. dollar. Now, the U.S. dollar is catching a bid today, which is very interesting, right? We got a weak jobs data number, ADP, but nonetheless, the dollar and even yields, look at the 10-year yield, is catching a nice bid today. Now, you might say, well, why is that? Usually weak economic data translates to cuts by the Federal Reserve, right? More cuts equal a weaker dollar and lower yields. This is what I'm thinking, guys. So this is big, is that we saw the Senate pass the bill, the big, beautiful bill, the tax and spending bill. And again, we know it's going to add 3 to 4 trillion in additional debt. And now it's in the House's hands. And if the odds are starting to favor it passing and more debt coming into the U.S., does that then make other countries say, hey, wait a minute, we're not going to be so eager to fund your debt, fund all this deficit, and will that they demand a higher interest rate? So I don't know. Again, this is just stuff I'm watching very closely. But again, the more debt the U.S. takes on, at some point people say, you know what, the U.S. can't pay this back. There's no way. And do they eventually say, hey, listen, for me to take the risk of loaning the U.S. money, in other words, buying treasuries, I'm going to have to be paid 5, 6, 7, 10%, 12%. Remember in the late 70s, early 80s, interest rates were like 16 to 20%. That would literally, with our debt load, cause an epic depression if it ever got that high. But again, my point is do people that are funding the deficit or countries that are funding the deficit start to demand a higher interest rate? Just something to watch with yields going up as we get closer to the passage of this spending and tax bill. All right. A couple other charts to go over here today, folks. CNC is taking a big drop today. Centene This is a healthcare stock. If we go to the 10-minute chart, you can see again, look at this drop. They basically warned on earnings. The stock again is plummeting here. It is trading around $38.45. If we look here and we zoom out, you can see it was already at the lows of the chart, and now it's trading all the way down here. But there is a level I'm keeping an eye on. This pivot high right here looks to be intriguing. The level for me is right around 36.75, and we're not that far away, right? I mean, we're in the 38s, so 36.75, about $2, $1.50 lower. Pivot point right here. You can see right here. Look at this, guys. So if I zoom in, you have this pivot here, but also this here. And then look at how price came up, consolidated, broke out, retraced, and then went on its merry way. So for me as a technical trader, that's basically confirming that this level has a high probability of being support. Now listen, remember, high probability doesn't equate to a guarantee. There are no guarantees in trading. The level could fail. But what I do as a technical trader and what I teach is to look for high probabilities, right? So if you could walk into the casino and say, hey, I'm only going to play games where I can win 80% of the time, that's essentially what you're doing. Obviously, no casino offers that because they'd be out of business. But the point is, in the trading world, that's what we're looking for. We're looking for high percentage win rate probability trading opportunities, but always keep in mind that even at an 80% win rate, it still means 20% of the time a level fails or the loss is incurred. And we just always have to remind ourselves of that, because honestly, if we don't think about the losses, then we're going to bet the farm on every trade. And then at some point, one of those trades crushes us, right? It's just the nature of the beast. We've probably all had that experience. Me, myself, I've had that experience many times over. All right, flipping through here, guys, let's get over to a couple other charts. So we did see Tesla. Tesla came down yesterday here on the charts. Bear with me here. Let me go and refresh this. So Tesla, look at this, guys. Remember, I went over this in the game plan yesterday, this beautiful wedge pattern. And I said, listen, we're going to open right here on the wedge line. And we have to watch as traders. Does it hold on a daily close? Does it hold the line? If it does, it could bounce, right? That's technical support. If it closes below, watch out below. Well, guess what? We can very clearly see it closed above the line. And look at where Tesla's trading today, right back up. So again, listen, it's not gaining a ton here, but it is bouncing back up, which based on yesterday's close, that would have been the high probable outcome, right? Remember, probabilities. So you closed above, so support held. That gave the bias to the bulls for holding the technical level. So what should price do? Would it go up or go down? If the bulls hold the level, you would think it would go up, and that's what's happening today. Now listen, as a trader, now I just basically watch the line, right? This line here, a breakout above, it goes up quite a bit. Breakout below, it goes below. But as of now, it held the line. It held the line. All right, Bitcoin catching a bid today, guys, to the upside. Interesting, Bitcoin's going up with yields. Again, I'm not saying that that's the new thing, but just interesting to see potential, this risk or U.S. debt kind of bomb that's going to be coming through in the form of a debt bill that's going to add another $3-4 trillion in basically deficit to the U.S. And now you see yields going up and Bitcoin inching up. And this is always what I'm always looking for, is slowly monitoring Bitcoin to see, okay, does it trade like a risk asset, or are there peaks or glimmers of light that it's trading more like a safe haven asset? So again, today at least it's up. Still has resistance right here. That's going to be a key level to watch. If it can get through this 109 level, it should go to 113. Same thing on the other side. If it breaks 100, it should go down to 95 to 93. That area right there, 95 to 93,000 on Bitcoin. All right, let's flip over to gold and take a look real quick. And gold again, we saw a break of the line, but no confirmation, recaptured, and now up and up. And again, it is up a little bit today. All we're caring about as a technical trader, does it close back below this line? If it closes, does it confirm? If it confirms, odds favor 80% that it goes down here. Again, if it doesn't confirm, you can't jump to the conclusion. I've been burned in my early career too many times, not looking for confirmation and just jumping the gun. And then lo and behold, I find myself on the losing side of a trade. So really that confirmation signal is key. Same thing up here, resistance around 34.40 on gold. But if it breaks above, make sure it confirms, then it should at least test the high at 3,500, but likely going much, much higher. Silver, bullish pattern is still intact. Can it break out? We'll find out. But again, bullish consolidation still looks bullish to me on the chart, and I remain that way or with that bias. Oil today, let's take a look at oil. Oil is continuing to get a little bounce, so I continue to be long oil in the money a little bit more today, so that's great to see. But obviously, I want to see this curl up. The upside target for me is still $67 to $68, maybe 69 right in here. We did hear that Iran is not allowing UN nuclear inspectors in. So again, we're seeing some stuff going on there, and that's upticking oil just a little bit. But again, nothing major yet on the oil front. One of the things, if you're really a close technical watcher, watch. So see the high of this consolidation was this candle right here. It's the little wick right up there. I know it's hard to see. Let me zoom in. So see right there. I'll put my mouse next to it, but you can see right there, right there. If you take that high and you go across, it's the exact high of today right there. See that? And so the reason I'm pointing that out, guys, is that if you get a daily close above this level, which is around the 66.40 level, you should see additional momentum come in on the buy side. Okay, so that's your break point right now on oil. Natural gas, let's take a look here real quick. If we flip over there, nat gas was down yesterday, but again, by the end of the day, it recovered a little bit. Today, it's up slightly. This, again, would be your downside target. Doesn't mean it's going to go there in the near term. That would just be where support would be high probability for a bounce. Right now, again, it's just kind of hovering. The level it's hovering this low here. If we just drag that across, pivot low there. So that's the reason why it's kind of finding some area there. The question is, does it bear flag and break down, or does it get a move back up? I would short it up here, and then I would potentially buy. I'm not going to say I'm definitely going to buy, because if it bear flags and breaks down, it might go a little bit lower to this level, but at least I'll keep it on my radar here. All right. So again, guys, just some interesting stuff in the market. But I think, again, as we come into this holiday, right? As we come into this holiday, I think the key again is to just be aware holidays usually have lighter volume. So it's kind of a more quieter, generally afloat market, right? Especially with retail being so ingrained in buying the market no matter what, kind of the animal spirits as we talked about. Now, we did see a little bit of a hiccup today with the ADP private sector numbers, but even the S&P, like I said, it's not like the S&P's down, because last month we saw a weak ADP number, wasn't negative, but a weak one, and then the jobs number was fine. So again, tomorrow we'll get that jobs number. If it's decent, you would expect an update tomorrow going into July 4th, right? So again, tomorrow is the half day of trading as well. So it's going to be very, very light in terms of the volume. Lastly, again, keep in mind the deadline for trade deals is next week, next Wednesday, July 9th. And Trump has said he won't extend it. But everyone, again, you saw the market yesterday sell off initially, then kind of bounce back. And it was kind of that taco, like Trump always chickens out kind of thing. Like no one really believes that he's going to be firm and jack up these tariffs on everyone again, because of the negativity that it will imply on the market. So we'll see. I mean, listen, anything could happen. Maybe he will stand up because he knows people are thinking that way. Maybe he will force it. We'll watch and see. Either way, it should be a good trading environment for us. And of course, I will be here to guide you through. You guys have a great one as always. Thanks so much for coming out, guys, and watching and spending time with me in the morning here today. I'll see you soon. Take care.